Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
Really good. I just traded around PPI, CPI, and just had some plans for that, but kind of was just wanting to get through those events and then do my thing after. So caught some upside midweek. Didn't really oversize late in the week. Just kind of saw the writing on the wall. Did some puts here and there, but yeah, good week overall.
Yeah, pretty mild week for me. That low volume environment isn't for me, and I've been waiting for pullback. So, um, said at midweek I'd rather be first on and first off than last on, last off any bus. Just works better usually to be a little
Yeah,
early and not wait for the whole entire show. HUSA kind of came through on Friday, put a little cherry top on the week for me. Um, Sizing's easy in a dollar stock, $1.50 stock that you've seen before. Just kind of fit a thesis, and timing that one was pretty good for me. But other than that, pretty light. Um, Eliminating some positions, maybe too many. Even if they're free share positions, you can get overwhelmed and have too many that you're monitoring. So a lot of rinsing for me this week, and that'll probably continue going forward here. I think for another week.
yeah. I've been on semiconductors a bit, and not really the big names, not like AMD and Nvidia. I mean, all AVGO, I guess, is a pretty big name, but just getting some good reads there. But it's still just in a range. It's just a big range. It's lower 1300s, the 1400 area, and as an options trader, you love that, but you can't linger there. You're not going to get the full move. There's really no point even in saying like, oh, this contract I sold for 1,400 bucks is 4,000 now, because you look at the chart and you wouldn't have held through that because it pulled back during the day, and um, it's just the nature of those kinds of trades, all time high charts. We've kind of been through that. The still the lower stress stuff has been gold, silver, oil, and you're going to see a lot more people talking about oil now and gold too than have been. They're so late. Um, all those sectors still have a lot of room, to the upside, but I think the worst thing to do is to chase news pop on war for oil. I just would not do that. I just think you want study some of the laggers, be comfortable in what you have, take some profit. But if you're just arriving at oil just now, and you're in our room, I don't know what you've really been doing because we have been on those for a really long time.
Yeah, I mean, we came out of the September to January thesis where, I mean, that was your chance to buy everything, and that worked out beautifully. And I mean, since then, it's just been, I guess, sector after sector after sector, whether it was the weed, the crypto part 15, oil, gold, silver, poopy energy. I mean, everything kind of came through. If there's one that we're on now, I would say it would be solar and restaurants are kind of the next. But in
Yeah,
general, we're
yeah,
we're at this divergence again, and I haven't used that word in a long time, where the market just ran kind of a little hot, and you got to have some pullback. It's just natural. It's just the course of nature. Like it's not going to go up for 5 years straight, especially in the way the world's working right now. We're
yeah.
we're ahead of our skis in that regard. We had a good run because we thought we were going to get out of this interest rate situation, and inflation was over. At Christmas, inflation was fine. That's what they were selling us, and gas prices were fine. And um, not to get off track, but what's your gas costing right now, sir?
Well, I'm in a natural gas car, so I actually
Oh my goodness,
haven't looked at gasoline in a while.
this
I
guy.
fill up for about $8.
Yeah, well,
But yeah, it's
are you above 3?
um still under three.
Okay, yeah. See, we're
Or
four we're 450 out
two
here
two
again.
ninety
We're
two ninety
four
four.
we're 450 back out here again, and I mean, I know the
Yeah,
guys in California are probably worse. So this illusion that hey, we're gonna soft land or whatever that we had at Christmas. It just ain't there. It's just not there.
Yeah.
The man behind the curtain has came out, and it's not there. So, just everything. Again, we had a bullish run. If you look at a chart that's bigger than a day, and you go back to even the beginning of 2022, I mean, that's a straight uptrend. That's a huge uptrend. SPY's up 50%. Or, excuse me, I'm looking at QQQ. QQQ is up 50% in that time. SPY's probably close to the same since 2022. What we were at 400, we're at 5. So 20% there. I mean, those are good. Those are good, strong bull runs, and the world's just
Yeah,
not lined up with that currently.
we um we got the timing on that really well. I mean, it was kind of CrowdStrike was the stock that flipped me on it, not Apple or any of those. But I just saw the flow come in there, started looking deeper. Um, had some levels on QQQ and in Nasdaq futures, and yeah, and it just took off from there. And then the hardest part of trading at that point for me was re-entering and know, locating pullbacks and all that. And then the sector rotations came in, and it actually got easier for me once that happened. There's one scenario here, and I guess we'll talk about it more when we talk about SPY, but that I just kind of want to entertain is that Apple had a significant pullback, um, more ahead of everybody else, and now Apple is showing some strength as the market sold off last week. Costco did the same thing, and I kind of entertain the idea that we have a significant correction coming in a lot of these other mega cap tech names, and that Apple is just sort of ahead of them in that trajectory. If Apple falls right back down, that's going to invalidate that. But I do think that that's possible. That Apple functions as a little bit of a flight to safety because the news Apple released wasn't anything special, but it was a good excuse I think to get back in there. So that's why I see like a scenario for a pretty big pullback in SPY, but I also see SPY possibly getting some protection in some of these big names.
I think there's going to be a fight. Um, I,
Yeah,
I'm a firm believer in what I posted probably a month ago, where the guy said, the new traders don't know anything but tech. So I think those people will get to the point to where they feel it's undervalued on every pullback, and they'll buy it up. Um, but I don't think that's going to hold the market up. I just think it's inevitable that we pull back in general, some more than others, and it's just we're ahead of ourselves, to be honest with you, in a lot of those names. And I think I said that since January. Um, you're kind of seeing, if you look at Apple Weekly, you got all your chart formations, your inverse head and shoulder, your double top, whatever you want to call it. There's probably some peg there too. But for
yeah,
me,
yeah,
for me, it's as simple as it's below the 50 on the weekly. Fighting back to that. I mean, that's your trend change, in my opinion. Is you got to get back above there currently, and I just think you're you missed the boat on all of those. I mean, you should have bought you should have traded those a long time ago. Um, they're going to need significant news. If not, you're kind of going to get range bound. You're going to get the higher lows and the lower highs in the best case scenario. So Apple right now, they went back to November, and it just kind of checked out or checked up off that November, that new bottom or level support from November. And until we break the December high, I mean, we're kind of in a box. I know that's tradable for you option guys, but for a long term
yeah.
perspective, I don't think it's going anywhere.
Yeah, I mean, we had a good spot on Apple, and like 129, 132
Yep.
was the
Yep.
area for that, and Microsoft had a good one too. I wasn't early in Microsoft, but it still ended up being one of my best longer term trades ever. I was early with LLY and some of those, but the I has been very simple, and we'll get to the numbers on that. But all I looked for and what I saw was, or kind of what I'd call like major put contracts that are months out, to wake up. And what I mean by wake up is there's already a ton of open interest there, but they get new activity. And so A 500, July July 480, and I mean, and that's it. That's the range. I think we land somewhere in there. And so um, we're going to have some pretty bad days to get there. And I think that a pullback like that is going to really feel like a disaster to inexperienced, newer people, and people who maybe have some experience but never seem to learn anything and are just options gamblers to just destroy them. So I think that's the scenario that we need to be prepared for. And to me, what I still look for is I still look for upside in that environment, and there will be some, and it's gonna come from these individual sector looks that we've really proven ourselves in for years now, and so that's an environment I'm comfortable trading in because that's actually what I learned in. That's why I started in oil back when market was starting that huge drop. So yeah, I mean I'm looking forward to it. I think it's healthy and would be fine. A pullback to the 480s isn't that big of a deal, big picture to me.
Yeah, I mean that you definitely it's just like the last few years in 2022 when it went from 430 to 370, people thought the sky was falling, and then last year when it was at like 460 and it went back to 412, people thought the sky was falling. If they had EMAs on their weekly, they would have seen it was bouncing back to those levels, and I think you wait on that. I was looking for
Yeah,
weakness in January, and I know you know that because you talk to me weekly. I was really looking for it then, and we've had, I don't want to say an easy market, but we've had a pretty tradable market for like 7 8 months. The longer
yeah,
you do this, those cycles just they don't really last like years and years and years unless everything is perfect. There's a lot of new innovation and hope in the market, and there's just not there right now. It jumps around. It kind of leapfrogs for me in that regard. And also April, I don't think I've ever traded a strong April. I think it has something to do with taxes. I really do. I think people get a bill or
yeah.
have to pay a bill and they have to sell some assets. So the best you get in April, just like the outside of 2020, summers are really low volume. Except for 2020, we had that hot penny summer. I've never really traded in the summer with a lot of volume. So you kind of pick up on those spots in the year where you expect the tide to be going out, so to speak, and you don't try to swim in. Then you just don't. And I think you
Yeah.
pick that up the longer you go. But when you say for like 460 or 480 to me, that's just checking back to the 50 on the weekly. I mean, I hate to say it, but it probably is healthy and needed in most spots. We just got ahead of our skis a little bit.
Yeah, yeah, definitely. Switching gears a bit, what are some things that you picked up in room this week that you want to mention and want to talk about? Because I had a few too.
I kind of had this epiphany, and it saddened me a little bit, to be honest with you, that we always have to teach the ABCs and one, two, threes. We can't really get into grad school stuff because we're going to constantly have new people coming in and they miss the ABCs and the one, two, threes. And if
Yeah.
we're not diligent at trade, if we just assume everybody knows that, and the market's good, when it goes bad, they're not going to be ready. And I think we're seeing that with people right now. Um, we're going to have a big divergence in how it works because I trade shares and you trade options. I mean,
Yeah.
I can't believe that was even a question. I mean, I don't trade options. I never have. I never will. If I do, unfollow me. I mean, it's that simple. It's that simple. If
Yeah.
I switch my style up, unfollow me, please. I'm lying because it's just not what I'm gonna do. Um, but I mean, that was eye opening to me. But I wanted to talk about just why you DCA and then why you sell some after the move on share side. And I was like, well, even that's probably too damn advanced for these people. I mean, it is
Yeah.
because they're
Yeah.
all. I mean, we need to teach the ABCs and one, two, threes, and just stay on that. And that's. I mean, that's just us as running the room, kind of figuring that part out. Um, but the max, I started what like yesterday or the day before when you posted about the max trades. Yeah, you're only supposed to trade maybe three or four things at a time, and you can't jump around until you've mastered one or two. Back to play it till it doesn't win. Like learning a chart, learning what you're seeing in a chart, and then taking that and apply it to another chart is important. Um, for me, you want to on the share side, it's important to take profit. Tilray, I could use as a good example. I had another one too, but Tilray is a great example. You don't let a stock run 60% and take some off the table, and it's simply
Yeah.
because you're going to lower your average. I mean, as basic as I can put it, if you buy something at $2 and it runs to three, and you sell half of it, you're now what you have left. You bought it at $1. If you stop loss that entry, you protect that profit. And it's, I mean, that's the game. And this is, I'd hate saying it's gambling, but that's where it's resembles gambling. Is you dictate your risk, you dictate your loss. You can put in as much money as you want and say I'm going to lose $100 on this trade if I'm wrong, or I'm going to take X, Y, or Z if I'm right. But you don't just
Yeah.
ride the boat the whole time and hope it's going to change your life, because that's not going to work for you. You're going to get washed out. So like taking profit for me is very important. That allows me to stay in positions. Keeping free shares, whether it's 100 or it's 50 or it's 10 or it's 800, it doesn't matter. That what matters is what's now my dollar cost average. Where would I sell it if the trend changes? And that's it. Like you got to get into that plan, and I think a lot of people are missing that. And on the option side, which you can speak to, it's harder because your moves are so violent. Your entry will come back. Like it's going to come back, and it might go below that, and it's very hard to protect that when you are only playing two or three contracts. So the game isn't what am I playing, it's how am I managing these positions, and how am I getting it to where my risk isn't there. And the only way you do that is take profit. Even if you're taking, I mean, if something runs, I don't get that. If something runs 20, 40%, that you're not putting yourself in a position to where either you can stop loss at entry and still be profitable, or you have all your money out that you originally put in. I just don't. I mean, that's what the game is. Mastering that is what the game is. Not what looking at a 5 minute chart, not time and sales. Like you have to have the risk management down, because you again dictate the risk management. That's 100% on you. Whether you're going to lose all of it or you're going to lose $100, that's on you, and that's on you to figure out how to put yourself in the best position. And I don't know why people's best position, or they think their best position is I'm up 50, how much more can I get? It just makes no sense to me. This game's not for you if you can't take half off the table when you're 50% up and be in a position that's free, or be in a position that is half of what your entry was. And then finding a spot to say, okay, this is where I'm going to reset and take it all over, because you can re-enter the trade. Tilray's the best example right now. It's 180. We're talking about it again. Do I re-enter? I have free shares. They're free to me. Do I re-enter again or not and play the same setup again? And um, Fubo, same way. I have a Fubo position. It's not down because they're free, and that's, I think a lot of people are missing that part of it. Um, and when it pops, I'll take money out of it if I think it's dying. But a lot of people miss, like, you need to juke the system and create your own system to where you're protecting your neck. We are robbing Wall Street. I live by that. You're not going to get the top, you're not going to get the bottom, and if you try, you're going to bump your head or scrape your knees on the way out. That's just how it is. So as soon as you know it's a repeatable process, you're going to be fine with taking money. But you have to practice something repeatable, and holding on for dear life ain't it. Planting flags ain't it. You DCA in,
Yeah.
you DCA it, you scale out, and you protect yourself. That's what you need to be doing. Yeah, go. Sorry, that was a little long.
No, yeah. So on just a quick example for me, if you call up the FCX day chart, so I bought that at $34, and that's my core position. However, the options I bought that that pop to 42, I was completely completely out. The reason it's right in the middle of my zone. My zone is 37, 46.50. And what happened? It pulled back to 37. That was where I got back in options. And what I do on those, it's pretty much very close to the money with lots of time, 6 to 12 months. And at that point, I feel like I could catch a move, back to the middle of that zone or beyond, because this as a comprehensive trade, I was so far up on it that with those options, I'm willing to kind of, you know, ride or die. Probably, 34 would have been when I would have cut them if it broke down. But yeah, that lets me kind of get there in the whole move. But the problem with a trade like this, the person I'm talking to who's asking me about it, they bought one contract and it's 50C and it's, you know, a shorter expiration than me. We're not talking about the same trade. I'm not trying to like big dog people with position sizing or anything like that. But when you have one contract and it's way out of the money and it's a shorter expiration, we're not talking the same language at that point. So when we talk about defining risk, what I see from people who get into options is they define risk by saying, I'm going to buy a $200 contract. I'm willing to take it to zero. That is a lot riskier than buying an $800 contract and willing to take it to 680 or 650, because that contract is still plausible that whole time. You buy the $200 one and it drops $100 in value, you're on the wrong side of that options calculator and you're pretty much done unless news saves your ass, like is going to happen with some crypto puts this weekend. I don't think constantly throwing $200 at something way out of the money, or even $50 at something way out of the money over and over and over again is a way that you're going to learn anything, and you're certainly not going to be successful. I in my notes post some expensive stuff. If you don't want to trade that stuff, then you got to trade something cheaper. You can't trade that same thing further out of the money and think you're really going to do anything. Um, Goose does it and is successful, but why? Because Goose sells at 20%, even if it's $10. So if you have to do it like that, if you're going to put $40 in an option, you got to be comfortable with a $10 return. You're not going to hold it for 500. That's just not what we do, and it's they're cheap for a reason. So yeah, I really want to discourage people from that. And then the other thing is, know the stock you're in. Some of these, like a defense stock or oil, there's no point in trading weeklies or 2 weeks out and stuff like that. I mean, you're putting up $200 to gain or lose 20, and you're kind of 50. You're 50-50. When I trade sectors like that, there's a much bigger thesis involved, and you want to kind of trade accordingly. Shares are better. There's a reason the beef trade is 80% shares and not 80% options. But if you want some options, they need to be close to the money. However long of an expiration you think you need, add a couple months to it. Just whatever, how close to the money you think you need to go a few dollars more towards the money. So just be conservative in that. You don't have to. You need to buy what the whales are buying. Reason? They get a lot more money than you, and they're in some complicated trades that are harder to see in terms of how they're hedged and whatever else they're willing to hold, and all that. We're in a smaller piece of that, so we're trying to catch a move I see, but we need to play it closer to the vest, especially in this environment. So that's why I hate the small account challenges. I think that's all bullshit. No offense to anybody. If you want to trade options, it's expensive, and to do it right, you have to be prepared for that.
Yeah, the second our secondary note I have here is, I mean, regardless of what you're doing, you're creating habits, and our system is diligent about the habits. or it's focused on the habits you should be creating. And one of those
Yeah.
is a repeatable process. And you have to believe that it's repeatable. And when you believe it's repeatable, you'll be okay with taking profit. You'll be okay with re-entering. But along the way, you should be learning the tickers. And I think another part of the beef trade is you kind of got to learn it share side, or at least watch the option contracts if you're going to only play those. So you can kind of learn how the movement works. So you understand the risk, how much profit is available in something because you learn the ranges of them. And that's why RTL works for me. It's kind of defined for me a lot of days. If this just stays inside this box, here's my downside for the trend to break. Here's my upside if it doesn't. I mean, I just do the math problem right there. Um,
Yeah.
so again, you're in charge of creating those habits. And I think a lot of people that the small account challenge is it. If your habits that you're creating are gambling, um, you're probably don't have the best ratio to win. I mean, if 90% of all traders fail, you're probably in that boat, and maybe even a higher percent, and you're already can only have a 10% chance to win. So you need to come up with really good creating better habits than I'm in a trade. What do I do? I mean, that's
Yeah,
where
I just
the plans come out. Is you should have the plan on what's if this does this, I'm gonna do this. You should have that determined already and master that going forward.
I just saw a guy with a big following, small account challenge, the $50 to $10,000 challenge. Day one, 120. Day two, 256. Day three, 45. So that's how all those small account challenges end up playing out because you have no choice but to oversize, and you have a couple good days, and you think, oh, I figured it all out, and you get and it's all zero DTE. So the minute chart, washes you out. Next thing you know, we don't hear about that challenge anymore. The room's on sale over and over again, and this has gone on for years. And people doing that are missing these huge sustained moves in a number of different stocks and sectors where even if you had put that $50 in some of these share side, you're going to have over 100 if you just you just position and wait a little bit. So yeah, I just don't think there's a quick road to riches.
No, no, and it took
It's
me
all it's survivorship bias for the people who do that, who
sure.
it happens to them. You hear about them. You don't hear about the 99% of people who aren't able to do that.
Yeah, I mean, it's taken me a couple years to where I'm comfortable instead of picking. I mean, I used to just pick one or two from your sectors or our sectors that we come up with, and now I feel like I'm more involved in the. Oh yeah, this sector's good, and I can take four or five out of that sector. But they're not all full sizes. I kind of spread that. I still have an allotment that I spread across that at DCA into those positions because I do believe I'll get a sector lift. But I mean, that's not, you don't start there. You really
Yeah.
don't. You can't start there. You need to start with, I'm going to pick one from this sector. It makes sense. I'm going to follow the chart. I'm going to DCA in. I mean, I just think beef now the part of the beef is you got to start with the cow, which is shares. You can't even get to the ground beef or the steak or anything with the options until you trade shares. I mean, I might be super biased, but starting with the option just seems like a path for destruction, in my opinion, because
Yeah.
you
Well,
need
and
to
if
you
you're
need to
going
understand
to,
how it works.
you do, and the take something like AG. When I was pounding the table on silver, the options and the beef side of that were were in the money or close to it, like let's say 5C, with like a year to go. So they're not going to really fluctuate day to day that much. You're pretty safe in there. They were pretty cheap, etc. But yeah, no, I completely agree with you. And options are scary. I see the appeal. I trade them every day, but you cannot find yourself staring at a screen when it goes against you, and then all of a sudden you just get hopeful. You think of scenarios where you can get out of it. Those thoughts start creeping in. You just gotta cut it loose.
Yeah, and I think reasonable expectations are a lot of it comes back to that. Um, if you need one trade to hit, you're probably going to miss. You're going to green to red 40 trades doing that. If you
Yeah,
have if Pele Goose Pele's a good example, share side Goose a great example, option side, you throw secondary in there too. I mean, look what they post. A lot of it is 10 or 15, 20%, and then it's what I have left that I got free, or the one I kept
yeah,
that is half of my profit. And that's the one that runs. So it's having that plan to protect yourself. But that those people started with just taking the money, taking the money, taking the money, taking the money, and then figuring out, wait, I understand how this moves. Maybe I should keep one here. And you have to
yeah,
start in that original box, understanding it's a repeatable process. Or you're not a day trader; you're a gambler. You just are. And
mhm,
you're more of a swing trader gambler, is what you are because you're holding these positions longer. You say it a lot
yeah,
of times that your positioning is 15 minutes usually in the morning. Um, if you're trying to hold that same trade for a week or two, that's a lot of 15 minutes. I mean, I'm not going to do the math, but that's like 7,000 times the times.
yeah. Right.
It's huge. So like your square peg round hole, you're probably bumping your head, waiting for more. And the sandwich is all we're looking for here on most days, just getting on base. And I know we're good at preaching that, but it's the
Yeah,
front end on how to do that and create the habits. Um, if you're looking back, you need to stop looking back. You need to look for the next one or look for the reentry on the same one. And you just again you create your risk. You're in charge of the risk. And if the risk is zero, you're just an idiot. It really is. And if your maximum is the moon, you're the same idiot. So having
yeah, yeah,
your window determined up front is going to help you. And then just keep filling your cup just over and over again. And yeah, at first you're going to miss a lot. You're going to have a little cup, a little Dixie cup, and there's going to be a waterfall. But you'll be able to expand that to a bucket or to a 5 gallon barrel or a 30-gallon barrel in the long run. As soon as you are comfortable with it and you have, again, you're creating your own habits. As soon as you have good habits, you can expand a little bit. And I think that that's the ABC part of it that a lot of people just miss. Um, I take blame for that, but I also blame the market a little bit. It kind of rocks people into that. When you have a great market, it looks like you can't lose, and that's not the normal market. Um, that just happens at fragments along the way, and then you get back to reality on a lot of things.
yeah. And I think when we talk about grad school stuff, and I'm getting more puts for protection or early in the day. It's like a put to a level, just because I'm not as confident that that stock's going to bounce at that level. So if you get a put, you're already in it. You can just take off, and then that's your trade instead. But I just can't emphasize enough. It is difficult to go back and forth like that. It's difficult to hedge and all that. So I would say keep it simple. The right question to ask me would be which sector has the best look, and if you're wanting to trade upside, you want to kind of just fish in those waters and stick to our hot list and all that. If you can't get your emotions right or you don't have the screen time, those early in the day trades are probably not for you.
Yeah, no, there's a big difference, and again, not to just keep ripping on option traders, but there's a big difference between trading what's currently moving and trading what's next, and that's 100 times easier from the share side. And that's our
Yeah,
focus. I mean, that's the people you're following. We're not really cared about what's moving today. We're worried about what's moving next, and we try to stay one step ahead of those rotations because it's just safer. It's easier to trade. You won't get blown up, for the lack of better terms. Do we take some L's? Sure, there's some L's here and there's some misses, but they're not like buying BBAI at $8. We're because we're buying that at, or not BBAI. What was the other AI one? Sound. Sorry, it's
Sound
not
Hound,
buying.
yeah.
Yeah, it's not buying sound at $8. It's buying sound at 2, and then selling some at 4, and then saying, wait, let's hold on to this because this might have a run. But by 10, if you're not out of that thing thinking about the next spot, which I think I did beautifully, I called support at 430 on that, and I said we're just going to go back, even though it checked at 6 a little bit. But you just have to figure that part out of the cycles, and be patient, and create those skills along the
And,
way, because that's what we do. Not just find momentum. I mean, I try to find
well,
one or
right,
two a
and
day,
there's
but go ahead.
another kind of post I see that really like baffles me, and I can't even wrap my head around it. But I'll just see like out of nowhere, someone's like, I bought whatever today. I'll just say that, and it is a stock that moved 60% already from when we talked about it, and I'm just like, what are you doing? Why are you buying? What's the thinking? Why are you buying that here? Oh, I think it's going to go higher. What? Why? What's going on? And they just don't really have a reason. It's just like they saw a big win here. They want to be part of it. Um, don't buy that stuff. You gotta be early, and you gotta learn to be early. And there's plenty of examples in here, and there's a process here um, to follow. But I can't stand people getting something after we're already out of it, or we're just looking for the exit, and they enter there, and you just have to be so careful with that in these conditions. Talk about the 10-year yields and just the spy puts waking up and all that stuff. Well, in those environments, like there's going to be some bad overnight moves. There's going to be big pullbacks. Stocks are going to struggle or consolidate or whatever, and you just don't want to be in that stuff. So this people who didn't do their homework, it really sticks out. They know the ticker, but they don't know the story, and just cannot stand to see that. And there's honestly a limit to how long I'll watch someone do that. You have to make progress, stay in our room, and it's just because I'm not going to facilitate bad habits. I'm going to help you fix them if I can. I'm not just going to sit there and watch it, and watch you just start losing money, and then you get upset and you're bitching at us about stuff that we never told you to do. So I'm just not going to be a part of that. So focus on your process, demonstrate improvement. If you're just going to gamble, do so quietly. Don't need to really see it.
Yeah, if you're trading something in general regularly, you need to have at least one historical level on the damn chart. That way, you kind of have a north star to keep your head right. Because a lot of people are on a smaller time frame, and then they just base opinions off of that. But you need to understand the environment that you're in any trade. And it's funny that you say like, um, the move already happened and people are buying. I say it all the time. Your best entry is going to be a red candle. So why are you buying green candles? I mean,
Yeah.
because you've seen something on the day. And what bothers me is the flip side of that is when we have successful, and it's the flipping healthcare plays right now. There's two of them. I don't trade them, so that's
Yeah.
also why it bothers me. But they're just ass, and people don't have a north. No, they don't have a north star on their map, and they're just saying, "Well, there's another red candle. Do I buy?" It's not that simple, and you should be a fan of it following currently, and then looking for support to form. It's not just going to be a straight move back up. So let the thing level off. Let it get a little bit of that frying pan bottom that I think I talk. Let it hit. Let it hit a 50 or a 200 on a chart. I mean, something there besides it's just down and it's cheaper now. Do I buy it? That drives me crazy. Um,
Yeah. Yeah.
because I mean, I understand watching it, but how do you not have a spot picked? And how are you not looking for that chart to respect something? It's just way cheaper than when you chased, so you think it's a good buy, and it's ridiculous to me. It really is. It's just there's no driver to that boat, um, at all. Yeah, there's just no
Yeah,
driver
and
to
I
this
think
boat.
that
That fucking guy.
there isn't good news for them. It's always bad news. and the mood is to sell off heavy on the bad news over and over again with all the Medicare stuff and everything. So yeah, I'm with you. These earnings are going to be pretty big. I do think there's an earnings trade there. I'll talk about next session, but yeah, I'm with you. And yeah, UNH was one of my biggest winners last year, and now it's just fallen below, when I even entered that. So it's a completely new trade that's going to take time.
Yeah, yeah. I mean, the one that held up was Lilly. I mean, that's the one you stay on because it stayed up. But
Only one that's been in my notes.
yeah, but
So
these
yeah,
these people weren't buying Moderna at 80. They weren't. They're not even thinking about Pfizer down here at 25. And you're worried about something that ran 200, 300%, and now is just coming back to reality because we're separating winners from losers. The speculation didn't match the reality. And yeah, I said that a few weeks ago, and I mean, yeah, it just bothers me why people they don't have a north star, and they just assume the first pullback is the only pullback. It's confirmation bias instead of some actual work, creating actual
um,
skills.
yeah, and I would say too. I mean, especially in sectors like that where I'm definitely on it. Just because I don't talk about it, don't think I didn't look at it.
Sure.
No, it's like if someone brings something like, "Hey, well, what about this stock? What's going on?" I already looked at it. It's not worth talking about.
Well, like
That
a good
that's
example.
usually the answer.
Sorry not to cut you off, but a good example for me
Oh yeah,
right now is CLSK. Like my lines are 330 and 410. I know that in my goddamn head. I mean, I'll pull a chart up right now if you want. It's in my head. I know what my levels are. It's $15 stock now. It's building support. For that $15 line to get on my chart, it's going to take some time. I don't care what the flow is. It's a scalp trade or a day trade at best if I'm going to play that small on the share side. But my levels I have are my North Star. That's what they are. That's why they're there is to keep me grounded, not hopeful that CLSK is going to the moon. I already had that trade. So it takes a
yeah.
lot for me to change my overall perception and how I see and value a stock. If it comes back to reality or gets a little oversold from here, that's fine. If it builds support, that's fine. But that's not happening in two candles on a 5 minute chart. It's just not.
Well, and I mean, and real quick on crypto, something that I said a long time ago has really borne out that the crypto service stocks have been better than miners. And the miners have some good range. They're not holding those gains. And when CLSK was $20, I said that combo trade I liked is long IREN, short CLSK. CLSK is under 15 now. So, even though IREN's kind of bounced around, that short position, kind of carried me in terms of that. And then the coin read and the coin range has been very precise. So I know people were getting into some of this stuff just because they were cheaper, um, but doesn't necessarily mean that they're going to move the same or be better. Coin's really been best. MSTR is really expensive now. I only trade it on Fridays, but yeah, I mean you get to this point, and it's often not just sector full send. It gets more complicated. We talked before about how the halving isn't necessarily good for miners. So yeah, you just want to be careful about that. And yeah, CLSK, it's hard to buy. It's hard to buy at 15, given where we were. For me personally,
Yeah, I was
so I
putting
had the same problem with Bitfarm. I'm under $1.
yes.
Re-entering that, it's kind of like
I
I
was
just
I
doesn't
was
have that much
putting
appeal.
I was putting five six grand in this thing when it was down there at the basement. But best believe
Yeah,
me, I took more than that out of it. But I'm not putting more than 100 shares in this thing now if I was gonna play it. It's a different, and that's again about having that North Star, the real value and what's possible in these companies. SoundHound's probably another good example. Um,
yeah.
you just gotta you can't just keep doing the same thing. There's not a stock trade, and it has to kind of get that process down and those rules down for yourself in the long run. And it just is what it is. the elephant in the room that you have to be comfortable with. And if you're not, this is not going to work for you. It will never work for you. You are going to miss more than you get. But with proper rules, you are going to win way more than you lose. And you can't have both. You can't have both of them. You can't win way more than you lose and catch every single thing that drops. Every
Yeah.
single you just can't. You're going to miss a lot. You're going to miss a lot. You're going to miss a lot of profit on the trade that you actually trade. You're not going to high point it every time. You're going to miss the best one in the sector probably most of the time. You're not going to get the A plus blue chip every time. Um, you're going to miss a lot. But just like baseball, 300% is a good. I mean, it's Hall of Fame. You're on base
Yep.
300. You're Hall of Fame. So it's about managing the positions and just getting on base, and not worried about the pitches that you could have hit, that could have been home runs. It's just get on base over and over again, and that's the juxtaposition, my big word, of being a good trader. And I don't know how to say it any clearer than you're going to miss way more than you catch, but you're going to win with good rules way more than you lose. And
Yes.
you have to be comfortable with that and get into that zone and focus only on that. Is yeah, I won $30, or yeah, I won $40, or yeah, I got out of that trade. Sometimes with nothing, but I managed it well and I didn't lose. Yeah, I'm on base with an E6, but it works, and that's
Yeah.
just how you have to look at it. And that's what you need to be mastering, not how do I get more? How do I get all of it? Is this still going? Like it's just it's just the wrong look, boss. It's just the wrong look.
Yeah.
Um,
I'm with you. And I'll just add that want like flow requests, we got to kind of be on that level. Like you got to already sort of be a student of that or be looking at it yourself. Because I post plenty of that, and I post the best stuff that I see, and it's not likely that something's going to get by me in that regard. And if it does, whatever, more power to those people. But I mean, we don't need to just look at our collab list. We don't need more. We
no,
need to filter what we have. So
no.
focus on that.
Shout out to Vegan on that last couple weeks. He'd be like, hey, this is what I got. What do you got? That's what I
Yeah,
want to
right,
hear.
exactly.
That's what
That's what
I
it's got
want
to
to
be.
hear.
Yep.
Oh, we're 3 cents off. Cool. And it's something that we're already on, that we've followed. That's great. That's a great one. Not is this still following? I've been looking at the day chart or the 5 minute chart. Is this still following? Like, where's your North Star at? Like, get a North Star on your chart, and make sure that North Star isn't off a 5 minute chart. Like, find it on the weekly, because that's I'm going to say that a lot here coming in the next 2 weeks. The trend has not changed until you see it on the weekly. Get ready for that, because
Yeah.
that's where we are right now. We'll do some spy, sir. Get out of
Yeah,
here.
let's do it. Yep.
Um, Sorry if I ranted too much today, but I think it was needed.
That was good.
509.08 to the downside. I had 509.69. I just felt like they were going to defend that. You were 513, which I'd actually fought there for most of the week, to be honest with you. That 513 was a good local level during the week.
Yeah.
520.75 top. You were 524. I was 523. So we really didn't get to our tops. We were close there. What do you got going forward over there in contract land?
Well, there's lot to sift through here. A lot of these multi-million dollar hot potato contracts just kind of floating around, bouncing back and forth. So you've got A17 489, about $11 million, and you've got 486p, same expiration. So 486 is at the ask, and then the 489 is sold. So there's kind of that gets a little bit complicated, but what that does tell me is that Whales are pretty confident that we're going to pull under 500 in the next couple weeks for 517 at that level uh, to be relevant. So it looks fairly bearish on my end. You got sold calls at 517, 500, so they think we're going to be under that. So it's kind of a bearish look. I do think it puts up a fight. So I'm not thinking we just go straight down or anything. But yeah, the outlook is bearish, and the puts woke up. That's sort of where I'm at. So I'm gonna set a couple levels here. I'm gonna say
Let me run something real quick
go
before you
ahead.
do that. So
Yeah,
I'm again I use multiple time frame volume profile on SPY is a little hard because it's an ETF. But still I look for what's respected, and we pop back down here to the daily 50 SMA. That's kind of where we are teetering right now. But if you look at your divergence between your 50 and your 200 over the last few years, it's the widest we've been. So that gap, in my opinion, needs to tighten. But again, it's about finding that level that's being respected on a time frame that's bigger than a 5 minute chart with a little bit of history to it. From a weekly standpoint, we are checked out. We're all-time high chart here, so pullback should be healthy. It's going to feel like the sky is falling, just like it has the last 3 or 4 times.
yeah, yeah, totally with you there. So I'm gonna say, let's 502.32 be my
Downside.
downside, and my upside be 514.71.
Yeah, the downside's kind of the hardest one for me. I mean, you can see the resistance on the top, and that level you had last week. I mean, you said 513.95. Your bottom level last week being the top level this week makes kind of sense to me. Um, I'm parked in the same spot on the top around 515. So I'm gonna go five. I will go 515.25. But the downside gets harder here because I don't have it on any time frame but the larger time frames. So I kind of go to a psychological level. Um, I do think we're gonna have an ass week. I really do. I thought that we'd
Yeah,
stay a little more inside bar than we did, and we didn't. So I'm gonna use weekly candles, just where we were a month ago. You know, the bottom where we were a month ago that seemed like we were running will now seem like doom hell, and I got just under I got 504.91, so I'm gonna go with that. 504.91 is this last big doji, red doji that I referred to. We need a couple more of these candles. um, I do think we got to go back to 477, 480. I think that's inevitable. I think that's healthy.
mm.
It's just how long is it going to take to get there?
Yeah, Wales think sometime before July is all I can kind of give you there for that 480p to really mean something. It Yeah, because you have to think about like what it costs now and what that options calendar looks like and everything. We need to be like well on our way there within about 6 weeks. So that's kind of the time frame there for me. I'm still adamant you don't chase puts. The CPI day showed that the way that it didn't really break down further. The time to enter puts was off of that PPI run that next day that could not really sustain itself. That was where you want puts. If you like puts, really overnight is better. You just have to plan that carefully. Tupac isn't going to give you a lot of one-on-one tutoring, but if you just watch what he does, you'll learn that style pretty well. So um,
Yeah,
yeah, just be careful.
I'll say I'll apply it what I say here, and the trend doesn't change until you see it on the weekly. And our last low, I'm a higher high, lower high, higher low, lower low guy, and our last low on the weekly chart was in November, and it was 412. So we have a big range that can consolidate here. That's just how I see it
Yeah.
from a TA standpoint. So your big range is 412 to like 525. Um, that range will be tradable, but if that is your range, if I was going to throw lines on that chart right now, there would be way more downside than upside, and you have to look at this chart and charts like this, all the tech charts. You just have to kind of look that way. Um, because we did get over our skis a little bit. So be ready for it. Be ready to trade it. That doesn't mean just flood into puts like Professor's saying. Um, but that does mean be kind of diligent with what you're trading. Maybe add an extra check to your thesis. Stay in sectors that are beneficial from the environment that's pulling everything else down. Like fucking gas prices are high. Gold's high right
Yeah.
now. I mean, sorry, it's boring, but you can't trade Tesla right now. You just can't.
Yeah, and then crypto once again showed you not an inflation hedge. It's not something to park your money in for the end of the world. It's still tied to the dollar, very, very much so. So you just got to be prepared for the overnight or over the weekend train wreck, and then you pick up the pieces and you trade the range after that. So um, yeah, we're still in that environment. I think the halving thing could very much be a sell the news event. So you just got to be really careful about that. Just because crypto reacted one way to it all these times previously doesn't mean it's going to happen this time, especially given where a lot of those charts are checked out to.
It's still a pet rock, and if you bought it in the 30s or better, and you didn't sell it above 65, you're just an asshole.
Yeah.
I mean, yeah, you're a swing or you're a swing trader, and you're holding for the, I don't know, you believe in the product, but like yeah, you got to get in the mindset of taking profit. You just do, and have that north star. And we were adamant on the lower price range, and it 100%ed from there. So I mean, that's another one I just don't understand. If you're gonna
Yeah, yeah.
if you're like a Bitcoin holder holding on forever, but to each their own, I guess. I guess with that. We're deep here, sir. So like and subscribe. There's a link somewhere. Sound like a good time for that.
Yep.
All right, let's get to work, sir.